Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss the RBI notifications and the RBI press releases that have been released in the August 2024 till now. So we are going to have the revision of the RBI notifications and the RBI press releases that are released in the August 2024, and this is very important for your RBI Grade B 2024 examination point of view. I hope that I am clearly audible and visible. Hello everyone, welcome to the session. Do give me a thumbs up first of all so that I can know that I am clearly audible and visible. Is there any problem in my voice? Are you able to hear me clearly? Am I clearly audible or not? So give me a thumbs up so that we can move forward, and welcome to the session. Today we are going to discuss the most important notifications and the most important press releases that have been released till now, and this is going to be very important session for you all. Okay, so before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting such relevant videos, as well as join our Telegram channel. In the Telegram channel you will get the PDF of the session. Okay, so the link for the Telegram channel is provided in the description box below. Let's start with the first question of today. Let's see how many of you are able to solve this question. So this is regarding the Monetary Policy Committee statement that is released in August 2024. So try to answer this question. Good evening everyone, good evening and welcome to the session. So try to answer this question. As per the recent MPC statement, which of the following statement is or are correct? That you have to tell me. Real GDP growth for 2024-25 is projected at 7.2% by the MPC. Core CPI excluding food and fuel. So core inflation, that is CPI excluding food and fuel inflation, is 3.1% in May-June, touched a new low in the current CPI series. Assuming a normal monsoon, CPI inflation for 2024-25 is projected at 5.5%. So which of the following is the answer? Yes. So first and second both statements are correct, that yes, the real GDP growth projection is 7.2%. Core inflation has gone down to 3.1%, and assuming a normal monsoon, the CPI inflation for 2024-25 is projected at 4.5%. Okay, so this is what the Monetary Policy Committee statement has said. Okay, so first and second statement is correct, but the third statement is incorrect. So taking all the different factors into consideration, the Monetary Policy Committee has said that the real GDP growth for 2024-25 is projected at 7.2%, and there were the conditions of the inflation that is given, that the fuel inflation is or we can say there is fuel deflation is coming. The price level, the general price level in the fuel category is going down. Okay, the core CPI, that is the CPI inflation excluding food and fuel inflation at 3.1% in May-June 2024, that is touched a new low. As well as there is the assuming a normal monsoon, CPI inflation for 2024-25 is projected at 4.5%. So these are some key ideas that you need to keep in your mind, and a question can come directly from here, and we have discussed the Monetary Policy Committee statement in details. Okay, coming to the next question, try to answer this question. Let's see how many of you will be able to answer this question. So as per the governor's statement, after the Monetary Policy Committee, the Monetary Policy Committee at its meeting decided to keep the policy repo rate unchanged under the liquidity adjustment facility. So this is your liquidity adjustment facility, where you have repo rate, standing deposit facility rate, and your marginal standing facility rate. So repo rate is kept constant at 6.5%. So the SDF rate is 6.25% and MSF rate is 6.75%. Okay, because MSF is greater than the repo rate by 0.25% and SDF is lower than the repo rate by 0.25%. So it was also informed that India's foreign exchange reserves reached a historical high of $675 billion as of August 2, 2024. So these are the key highlights, that is the benchmark interest rate, repo rate has been kept at 6.5%. The current account deficit is manageable. Foreign exchange reserves has rose to a historic high of $675 billion. Okay, coming to the next question. Now this is a important review. So the Reserve Bank of India has reviewed the master direction for the peer-to-peer lending platform. So there is a peer-to-peer lending platform, or the NBFCs, the non-banking financial companies peer-to-peer lending platform. Okay, so that is these are the categories of NBFCs that is regulated by the Reserve Bank of India. What do? They provide a platform where the people that have excess money, that is the people that have too much money, they have excess money, they can come, they can join the platform and they can lend their money, while the people that have less money, that are seeking money, that want the money, they can take the borrowing. So the peer-to-peer lenders, like the peer-to-peer lending platform or these kind of NBFCs are only providing a platform so that the people with excess money can come in this platform and the people that want the money can also come in this platform so that they can they can transfer or they can do the transaction. Okay, the lenders want to lend and the borrowers want to borrow. So now there is a review that has happened, and as per the review, as per the amended provision, the aggregate exposure of a lender to all the borrowers at any time. So one lender is lending to different borrowers, let's say. So a lender exposure to all the borrowers at any point of time is capped, is maximum of rupees, how much? Can be maximum of rupees 50 lakh. Okay, so this is the idea, that as per the amended provision, the aggregate exposure of a lender to all the borrowers at any point of time across all the peer-to-peer platforms shall be subject to a cap of rupees 50 lakh, provided that the amount lent by the lenders on the P2P platform is consistent with their net worth. So there is the amendment that has happened in the master direction. So these are the amended provision. First of all, the NBFC peer-to-peer shall not provide or shall not arrange any credit enhancement. The peer-to-peer NBFC is only providing a platform. The only task of the peer-to-peer NBFC is to provide a platform. The peer-to-peer NBFC cannot do any credit enhancement, cannot provide any credit, cannot guarantee any credit. NBFC peer-to-peer shall not assume any credit risk, either directly or indirectly, arising out of the transactions. The NBFC peer-to-peer shall not cross-sell any product, okay, except for loan-specific insurance products. That means the NBFC peer-to-peer can provide the loan-specific insurance products, but these loan-specific insurance products should not be in the nature of credit enhancement or credit guarantee. So the peer-to-peer NBFCs, they should not cross-sell or they should not be providing any specific other product except for loan-specific insurance products, but the loan-specific insurance products shall not be in the nature of credit enhancement or credit guarantee. Okay, the aggregate exposure of a lender to all the borrowers at any point of time across all the P2P platforms shall be subject to a cap of 50 lakhs, provided that the amount that is lent by the lenders on P2P platforms is consistent with their net worth. So that is the maximum that a lender can lend is 50 lakh. Now this should be consistent with their net worth. How are they getting so much of the money? It should be consistent with their net worth. In case the amount lent by a lender is more than 10 lakh rupees, across the P2P platforms, the lender shall produce a certificate. The lender should produce a certificate to P2P platforms from a practicing chartered accountant. That is, if a lender is providing more than 10 lakh rupees across the P2P platforms, the lender shall produce a certificate. The lender has to show a certificate from the chartered accountant certifying minimum net worth of 50 lakhs. Okay, NBFC peer-to-peer shall have a board approved policy in place setting out the rules for matching or mapping the lenders with the borrowers in an equitable and non-discriminatory manner. So any confusion here? So this is the whole idea of the amended provisions. We are going to discuss further amended provisions, but this is the basic idea of the amendment that has happened in the NBFC peer-to-peer. The guidelines have been made more strict because some of the NBFC peer-to-peer, they were trying to undertake the credit risk, or they were trying to take the money and then after taking the money from the lenders, they were investing it at somewhere else. So RBI said that is not allowed. The lenders should be lending and the borrowers should be borrowing. The peer-to-peer platform is like NBFC peer-to-peer should only provide the platform. That's it. They cannot invest the lender's money. They cannot use the lender's money directly. Okay, so that is the idea. Now coming to the next question, try to answer this question. try to answer this question. So RBI has decided to elaborate and clarify certain provisions with some modifications for proper implementation of the NBFC peer-to-peer lending platform directions. As per the amended provisions, the funds transferred into lender's escrow account and borrower's escrow account shall not remain in these escrow accounts for a period exceeding what? Yes, it is T+1. So first of all, see, can the lender directly lend from his original account? Can the borrower directly take the borrowings in his original account? So what happens that for the lender there is a escrow account. Okay, so fund transfer between the participants on the peer-to-peer lending platform. So this is the platform, this is the lender, and this is the borrower. So the transaction or the fund transfer that should happen between the lender and the borrower, that should happen through the escrow account, through the third party account. Okay, now in this escrow account usually the money is blocked until the conditionalities are being met. So escrow account mechanism should be used in between the borrower and the lender. Okay, and this escrow account will be operated by a bank promoted trustee. At least 2 escrow accounts should be there, one for the lender and one for the borrower. One for funds received from lenders pending disbursal. So what is happening? That there is the lender escrow account. Like lenders are lending the money, they are providing the money, and that money will be deposited, or that money will come in the lender escrow account. And the other escrow account will be there, that will be collections from the borrower. So borrower will send the money for completing their liability or for returning the money. They can send the money to the borrower escrow account. Okay, so the lender escrow account is there for receiving the money from the lender, and borrower escrow account is there for receiving the money from the borrower or collecting the EMIs from the borrower. So this 2 escrow accounts should be maintained. Under this prescribed fund transfer mechanism, fund from the lender bank account shall only be transferred to the escrow account. It should not happen that directly from the lender the money is getting to some other account, no, or to some borrower's account, no. From the lender account, the money should go to the lender escrow account only, and from the borrower account the money should go to the borrower escrow account only. The borrower shall transfer the amount towards the repayment of loan from his bank account to the borrower escrow account. So directly there should not be the linkage between the lender and the borrower through their own accounts. The linkage should only be in between the borrower escrow account and the lender escrow account, and the funds transferred into the lender's escrow account and the borrower's escrow account shall not remain in these escrow accounts for a period exceeding T+1 day. Okay, where T is the date on which the funds are received in these escrow account. That is for only, like in the escrow account, the funds should not remain for more than T+1. So that is the basic idea. Now there are other guidelines also. These are just the basic guidelines. You can read it out. Nothing very complicated. Just you need to have the basic idea here. Okay. Coming to the next question, I hope very easy question, you will be able to answer this. We have discussed about the survey of professional forecasters. Okay, we have already discussed the survey of professional forecasters and the consumer confidence survey. So try to answer them. So Reserve Bank has been conducting the survey of professional forecasters since September 2007. 44 panelists has participated in this current round of the bi-monthly survey conducted during July 2024, for which the results were released in August 2024. Now, which of the following statement is or are correct in this regard, that you have to tell me. So real GDP growth is expected by 7%. So real GDP is expected to grow by 7% in 2024-25, revised up by the 20 basis point from the previous round. It is expected to grow by 6.7% in 2025-26. While the real GVA growth, that is seen from the value addition point of view, from the production point of view, the real GVA growth projection has been revised up marginally to 6.7% for 2024-25 and remained unchanged at 6.4%. For the 2025-26. Annual headline inflation based on consumer price index is expected to grow by be at 4.5% for both years 2024-25, 25-26. So this is the idea. So first and second statements are actually incorrect. Only the third statement is correct. That's why the right answer is 3 only. Okay, so these data points we have discussed. In the survey of professional forecasters, there are the ranges that are provided, or there are the probabilities that are provided, but at least try to remember the main data points that are given here. That what is the forecast for the 2024-25 in terms of real GDP, real GVA, in terms of the CPI. Okay. Next question is regarding your survey of professional forecasters. In this, the data regarding the imports and exports have been mentioned, that the exports are projected to grow by 3.8%, imports are projected to grow by 5.3%. So the current account deficit is expected at what percentage during 2024-25 and at 1.1% during 25-26. So here the answer is 1%. Yes, very good everyone, that the current account deficit is expected at 1% during 2024-25. Got it? Nice. Coming to the, so this is the data points that have been presented. Now coming to the consumer confidence survey. Now this is also bi-monthly survey. This is also the bi-monthly survey that happens. Okay. So as per this bi-monthly survey, there are the data points that have been released. Now this bi-monthly survey has been conducted across 19 major cities, and the female respondents accounted for dash percentage of this sample. So 54.4% of the sample, absolutely correct. Okay. So the Reserve Bank of India has conducted the July 2024 round of the bi-monthly consumer confidence survey. 54.4% of the respondents were females. The survey has happened across 19 cities. So consumer confidence survey, current period, like consumer confidence has declined for the second consecutive survey round after prolonged rising trend in the post-COVID period. So after the post-COVID period, there was the increase that has been seen in the consumer confidence, but now for the 2 consecutive surveys, the consumer confidence is going down, and the current situation index declines to 93.9 from 97.1. While if we talk about the future expectation index, that has moderated to 120.7 in July 2024 from 124.8. So from 124.8 as per the previous round, there is the value of the future expectation index 124.8, which has moderated, which has come down to 120.7. Okay, so you can see that in the current perception there is negative sentiments that is there, while in the future there is positive sentiments, but the positive sentiments are declining. So that is a concern. Okay. Now households inflation expectation survey, this was also conducted in the July, and in the 19 major cities, the 51.9% were the female respondents, and you can read the data points. The most important surveys that are there is the survey of professional forecaster, consumer confidence survey, and your inflation expectation survey. These 3 are the most important ones. If required, like I will take the marathon session in the first week of September. Till then I will see that if other surveys are also important, I will bring out the other surveys also in the marathon session, but for now these 3 surveys you must be doing. Okay. Now coming to the next question, try to answer this question. The Reserve Bank has constituted an expert committee to benchmark the statistics regularly disseminated by it against global standards. Okay, so we want our statistics, we want our data to be at the global standards. Okay, or we want our data to, like, the continuous improvement in the data quality should happen. That is the idea of the Reserve Bank of India, and for that the expert committee has been constituted, which is going to provide its report at the end of November 2024. The chairmanship of this committee is under Dr. Michael Debatra Patra. Okay, so yes, E is the right answer. Very good, everyone has given the right answer. Nothing like much understanding you require here, just the chairman, when the report is going to come out, and what the expert committee is all about. It is about benchmarking the statistics, the data information regularly disseminated against the global standards, and like improving the quality of the data and providing guidance on the scope for further refinement of the data. Coming to the next question, RBI has proposed to increase the UPI limit for tax payments to help the taxpayers to pay higher tax liability quickly. Now, usually for the general UPI limit is like if you want to send money to your relative, if you want to send the money to the merchants, the limit is 1 lakh rupees. but for certain conditionalities, for certain things, the UPI limit is higher. So for the tax payments, the UPI limit has been like proposed to be increased to 5 lakh rupees. Very good everyone. So there is the proposal that for tax payments, the UPI limit should be increased from 1 lakh to 5 lakh. For different things, there are different limits. Okay, this is not the first time that RBI has hiked the limit. In December 2023, the RBI has hiked the limit to rupees 5 lakh for certain payments such as hospital bills or educational institutions bill. NPCI said that for normal UPI transactions, the daily limit is your 1 lakh rupees. For the capital markets, like for the SIP or for your insurance premiums and such collections, the insurance payments, foreign inward remittances, the transaction limit is 2 lakh. For the IPO, the initial public offering, for the educational, hospital bills, for the retail direct scheme, the limit is 5 lakh. And for the tax payments also, it is said that the limit should be 5 lakh. Okay. So now the statement on developmental and regulatory policies, I hope you have read this document. If you have not read this document, you should be reading this document. Okay. So as per the statement on developmental and regulatory policies, there are certain proposals that have been made by the Reserve Bank of India. Okay. Now these proposals are very important, so give it a read. There is nothing much complicated things that have been said here. Simple things are presented here. The public repository of digital lending apps. So it is said that the digital lending apps, there are some unwanted players that are creating unwanted situations in the digital lending space, that is creating some problems. So it is said that we have to create a repository, public repository. The data or the details have to be collected about the digital lending apps so that we can regulate them better. So guidelines on digital lending has been provided by the Reserve Bank of India again and again, so that in the interest of customers, data privacy, concerns on interest rates, recovery practices and mis-selling. This was issued in September 2022 by the Reserve Bank of India. However, media reports have highlighted continued presence of unwanted, unscrupulous players in digital lending who falsely claim their association with the RBI regulated entities, with the RBI regulated banks and the NBFCs. So they are creating some problems, and for them there is the requirement for a repository to be created so that the identification of the real digital lending platforms can happen. So repository will be based on data submitted by the regulated entities. So banks and the NBFCs will submit their the data will be submitted by them directly to the repository and will get updated as and when the regulated entities report the details. Addition of new DLAs, like if there is a digital lending platform that is connected with SBI, PNB, so they will mention it. So you can see that okay, this digital lending platform is actually correct or not, is actually related to some regulated entity or not. Okay, or if deletion is happening of some digital lending app, that will also be mentioned by the banks. So this is just in the starting phase. The RBI has proposed such kind of public repository. Now the details will be released by the RBI separately. Next was regarding the frequency of reporting of credit information to the credit information companies. So RBI proposed that there is the requirement of faster update in the credit information that should be done by the credit information companies, and for that there is the complete guidelines that has been released by the Reserve Bank of India. So try to answer this question. RBI has directed that the credit information companies and the credit institutions, they shall keep the credit information collected or maintained by them updated regularly on a fortnightly basis, that is as on 15th of every month and the last day of the respective month of every month, we can say, or at such shorter intervals if they are able to do so in the shorter intervals. So credit institutions have to provide the information to the credit information companies so that the credit information companies can on the faster manner disseminate the information regarding the bad borrowers or the institutions that are not returning the loans. So credit institutions that are providing the credit have to disseminate the information, have to provide the information faster to the credit information companies. So credit information companies are required to ingest. Now credit institutions are going to provide the data on the fortnightly basis to the credit information companies, and credit information companies are required to ingest or use the data or use it in its report, ingest the credit information data received from the credit institutions as per their data acceptance rules within 7 calendar days. It was said before of its receipt from the credit institutions. Now the timeline has been improved, or timeline has been decreased, we can say, and now within 5 days the ingestion of the credit information data has to happen by the credit institution companies. So credit institutions will provide the information on the fortnightly basis to the credit information companies, and within 5 days the credit information companies has to use that data, has to ingest that credit information data and further disseminate the information to the other institutions. Got it? Yes, within 5 days. So this is the basic idea. Credit information collected or maintained by them, by the credit information companies, should be updated regularly on a monthly basis or at such shorter time. Now the RBI has said that it should happen on a fortnightly basis. Like within fortnightly, on the fortnightly basis, credit institutions should provide the information to credit information companies, and the credit information companies should in a faster manner they should ingest the data, they should disseminate the data within 5 working days. Okay, sorry, 5 calendar days of its receipt. So this is the idea. Any confusion? And these instructions shall be effective from January 1, 2025, but the RBI has requested that if you are able to do so before this period, so you should start the practice from before this period also. So however, the credit institutions and the credit information companies are encouraged to give effect to these instructions if they are able to give effect prior also, and the submission timelines will be reviewed by the Department of Supervision of the Reserve Bank of India, that the institutions are following the timeline or not. Okay, now coming to the next question. Now there is the SRO guidelines, the self-regulatory organization. How many of you know about the self-regulatory organization? Yes or no? Have you ever heard about the self-regulatory organization? I want yes from all of you, because we have discussed the self-regulatory organizations, the omnibus framework of the self-regulatory organizations for the banks and NBFCs. Then we discussed that the RBI is inviting the application for the NBFCs, where there were further like norms that were provided. Then there was the SRO guidelines that was released for the fintech also. So have you heard about SROs? Yes, right? All of you have heard about SROs? Yes. So now the SRO framework, the Reserve Bank of India has released the SRO framework for the financial market, okay, intermediaries. So for the financial market, we can say. So in order to ensure that the SRO delivers on its objectives and responsibilities, it is important to ensure that it is independent and it has certain, like it is following the eligibility criteria. So what are the eligibility criteria for the SRO? First of all, it should be a not-for-profit company that is registered under the Section 8 of the Companies Act of 2013, correct? Must have minimum net worth of 10 crores. No entity shall hold 10% or more of its paid up share capital. So second and third were incorrect and only one was correct. So D is the answer here, okay? So the Reserve Bank of India has released the framework for recognition of SROs in the financial markets regulated by Reserve Bank. As you know that there is the capital market. Capital market is regulated by who? Anyone can tell me that who regulates the capital market? Who regulates the capital market? Who regulates the capital market? Anyone? SEBI, very good. Securities and Exchange Board of India regulates the capital market. Who regulates the money market? Who regulates the money market now? It is the Reserve Bank of India. It is the Reserve Bank of India that regulates the money market. Yes. So there are the like RBI is also managing the financial market, that is the money market. So Reserve Bank of India is tasked with the regulation, development and oversight of the interest rate markets, including the government securities market, money markets, including the market for repo operations in government securities and corporate bonds, foreign exchange market, derivatives on interest rates, prices, foreign exchange rates and credit. So RBI is also handling a part of the financial markets. So Reserve Bank of India is saying that if we are bringing out the SRO framework, the self-regulatory organization, we are bringing the SRO framework for banks, we have brought the SRO framework for NBFCs, that is for the regulated entities, we have brought the SRO framework for fintech sector. So we should also bring the SRO framework for financial markets. Okay, so the framework for recognition of SROs in the financial market regulated by Reserve Bank of India is based on the omnibus framework that the Reserve Bank of India released for the SROs for regulated entities. So like the omnibus framework discussed the responsibilities, the characteristics about the SRO. Similarly, the framework for recognition of SRO in financial market, this framework is also discussing the same responsibilities and such, as this new framework is dependent on the omnibus framework. Okay, so I hope you remember this. So eligibility criteria is also same, that the applicant shall be set up as a not, if it is a SRO in the financial market segment, so it should be a like, if it is a applicant, if it wants to become a SRO in the financial market segment, so applicant shall be set up as a not-for-profit company registered under the Section 8 of the Companies Act 2013. Applicant must have minimum net worth of 10 crore and there should be no entity that shall hold 10% or more of its paid up share capital. As well as the Reserve Bank of India has also shared the characteristics of SRO. So sufficient authority the SRO should have through the membership agreements, so that the SRO can create a link between the financial market intermediaries and the Reserve Bank of India. Okay, so SRO should have some authority also, so that the SRO are able to tell the financial market intermediaries to work according to the regulations of the Reserve Bank of India. Okay, so SRO are going to become the link between, SRO for the financial markets are going to become the link between the financial market intermediaries and the Reserve Bank of India. So members used in this framework, so whenever we say members, that is the financial market members or financial market intermediaries, so the term members used in the framework refers to the market participants and authorized market infrastructure providers which accept the membership of the SRO. So any member of the financial market can become the member of the SRO. I hope this is clear. So this is it regarding the SRO framework. For like, I am not going to take a separate session for the framework for recognition of SRO in financial market, because this framework is dependent on the framework of the omnibus framework. I have taken a 1 hour or 2 hour session of the omnibus framework, so I have already taken a separate session of omnibus framework for recognizing SRO for regulated entities. Now this new framework is dependent, or this is based on the omnibus framework, so there is no requirement to take a separate session. So just read through the basic idea, just go through this framework once, because this is the most recent one, so of course this becomes important. So just go through it. If you understood the omnibus framework, there is nothing much different that is provided here, right? So I hope that you will be able to do so. Coming to the next question. Nikhil, like if you have a course, Nikhil, if you have a course, like you should go through the PDFs of the course. They must have provided number of SEBI circulars or such. Because what we have discussed is just like we focus more on RBI notifications, RBI press releases. SEBI circulars, I have only covered the most important SEBI circulars or that were quite in news at that time. Okay, so you have to see what PDF you have that any institution that you have a course with has provided. So Reserve Bank of India recently released the Financial Literacy Ideathon winners. The Reserve Bank of India had announced the Financial Literacy Ideathon for postgraduate students on the topic Money Matters for Young Adults, Rethinking the Outreach Strategies. So yes, this is the correct title. As part of its Financial Literacy Week 2024 campaign, the Financial Literacy Ideathon was released, and this was the title of the this was the topic of the Financial Literacy Ideathon. What was the theme of Financial Literacy Week? What was the theme of the Financial Literacy Week? Okay, so see, the Financial Literacy Ideathon, this was on the topic of Money Matters for Young Adults, Rethinking Outreach Strategies. Okay, the Financial Literacy Week, this had the title, or this had the theme, Make a Right Start, Become Financially Smart. So Financial Literacy Week had the theme Make a Right Start, Become Financially Smart. But under this Financial Literacy Week, there was a ideathon that was launched for which recently winners have been announced. So this ideathon had the topic Money Matters for Young Adults, Rethinking Outreach Strategies. Okay, so do you understand the difference? So on August 5, 2024, there is this notification that RBI released. In this notification, there is clearly it is written that this is the topic. So for Financial Literacy Week, the theme is Make a Right Start, Become Financially Smart. But for the ideathon, the topic is this. Okay. Yes. So this is it for today's session. Now if you go to the, you can go to the edutap.co.in. If you want to get the previous year questions, if you want to, here in the free material you are getting the blogs. Through the blogs you can get much information about the Reserve Bank of India, about the RBI Grade B examination, what sources from where to prepare, and as well as, so you can join the Telegram channel here to get the PDF. If you want to get the exam information about the RBI Grade B, so here you can see that you are getting the exam information, the ESI syllabus, FM syllabus, phase 2 pattern, the exam pattern, the most important topics are also mentioned here. So if you at the last time, if you want to see the important topics, you can see it here. The strategy is also provided, as well as the success stories are also provided here in the blog manner, so that you can read the important parts. Okay, so this is it for today. No question from currency and finance, so that must be covered in your report sessions now. In the report sessions you must be getting the questions from the report on currency and finance. Most welcome everyone. I hope you like the session. So do tell me that out of 12 how many marks you have got. So do tell me that out of 12 how many marks you have got. The report questions, the MCQs will be covered in your report session. Okay, so your ESI plus finance sessions are being taken by Gurkirat sir. Okay, so this is it from my side. Thank you very much for joining the session. Do tell me that how many marks you have got out of 12, and do tell me that if you like the sessions. Okay, around 6-7 surveys are there. I have told you that 3 surveys are most important. You can go through the other ones also, but just have the brief idea of the other ones. See, report sessions are taken by Devanshu Sanna. I cannot take reports. Devanshu sir take reports. Okay, so world development report or such kind of reports is taken by Devanshu sir. Good, Shubham, that is good. So this is August first part only, because August is I have taken the news articles till 20th August. Okay. Okay. So do tell me in the comment section if you like the session, and do tell me how many marks you have got. So I hope you are enjoying the sessions, as well as less Finance 360 sessions are going to happen. So Finance 360 sessions will be conducted less, as in your marathon sessions, in your revision sessions, the topics will be covered. Okay, from the August month I tried to cover the important topics in this session. Further, if required, if I find some important topic, I will take a Finance 360 sessions. But as your marathon sessions are going to start, so the other sessions, the CT 360 session or Finance 360 sessions, they are going to reduce. Okay. Okay, so thank you very much everyone. Thank you for joining the session. So this is it for today. Let's meet now in the marathon sessions, and if in middle I find some important topic that is required from the exam point of view, then I will take a Finance 360 session. Okay, thank you everyone. Thank you for joining. Yes, I will take the remaining RBI circulars through the revision sessions itself. Okay, so I was seeing that I have covered in today's session, I have covered most of the RBI notifications, RBI press releases that is in the RBI website in the August month. Okay.